Today, we're going to cover the basics, and tomorrow, the next lesson, we'll cover more advanced topics. There may be stuff here that you already know. Just bear with us so that you know completing this course won't grant you any airdrop or meta allocation or an NFT or anything like that. It's all about the education. That's what we're here for. Here are some prerequisites that you should already have a Solana compatible wallet funded with some SOL. One SOL is good to start with, but you can do less if you need to. You should already know how to buy and sell tokens on Jupiter and a high level understanding of what cryptocurrency is. So moving on to our disclaimer. So we are not financial professionals. This should not be construed as financial advice. Any money you put in, you do so at your own risk, and please don't risk any money that you cannot afford to lose. So yeah, that's our little disclaimer there for you. I am Heavy Metal Cook. I'm your instructor here. I am the bootcamp moderator. I am one of the LP Army leads. I've been at this for a while, mined ETH, LP on Ethereum, and Avalanche before coming over here as Sol. Done a lot of things. I love cooking, weightlifting, heavy metal, all that good stuff. But, that's enough about me. All right, so now we're going to get into a little bit of DeFi terms, market making on the blockchain. These are key things that you need to know, you should know, and I'm not going to go through every single one of them. I do have a LP Basics course where I go into detail on each of these definitions, but things you should know here is TVL, what it means, total value locked. You need to understand volume. Volume is king, guys. Volume is a very important term that you need to understand. It's the amount of trading over a given period of time. It's usually listed in USD over the last 24 hours. Volatility is also extremely important to know how much it's a measure of price, a token, its price going up and down, market cap, all these things. So again, if you don't know these very well, go check out the LP Basics course on lparmy.com/academy. So an AMM in DeFi is an automated market maker, and that's how this happens on blockchains. It's run by smart contracts. It's like a program that runs on the blockchain itself. It's the simplest type of pool there is, and it's just a means to facilitate automatically trades that people do. They buy something on Jupiter, it gets routed through some type of AMM. Okay, you guys should all know what LP stands for. It means many different things. So next we come into the CLMM, concentrated liquidity market maker. AMMs are not capital efficient. I'm going to show you a visual on that here in a second, but the CLMM allows you to concentrate liquidity, and that helps you to earn more fees. Okay, so here's what that looks like. On the left, we have our standard AMM, and I'll zoom in here and we can see liquidity is spread out from 0 to basically infinity. Okay, well, let's say that all the price action is happening between $30 and $35. Okay, so this is where your liquidity is being actively used. Well, outside of that, the liquidity is not being used. So you're spread out over this entire range, and it's just less capital efficient. The upside to this is that you're never out of range. You're always in range. As long as you have money in there, you could be earning fees no matter what the price does. With the CLMM, concentrated liquidity, it helps to solve that problem of capital inefficiency by allowing you to focus your liquidity where the trading is happening or you think it's going to happen. So we see in this example, we focused most of it between 30 and 35, but just a little bit on the outsides in case the price swings. So that's what that is. There is a risk with that, of course, because if the price swings beyond your liquidity, you stop earning fees. Okay, now here's some key points that I want you guys to remember. LPing, you are not staking when you are providing liquidity. You're not trading it. There's some similarities there. Tokens are being swapped one for another, but you are not directly doing a trade. When you're LPing, especially in concentrated liquidity, your assets can all be swapped one for the other. And I will give you some good visuals on this later, but know that, just because you deposited one token doesn't mean that you're going to get all of that one token back. High demand assets, a lot of volume, that's what helps achieve profit. Again, volume is king. One thing that helps you remember to manage your risk when doing this, especially if you're doing memes, expect them to go zero. Don't stay in too long. Manage your risk. Long-term tokens are safer to do. It's lower risk, but lower rate of return. It's like going to the casino. The more you bet, the higher the reward. Safer bet, less wrecked.